Very excited to be sharing some very, very important information with you today. Paul May here with the May team of eXp Realty, but I'm not going to talk about real estate that much as far as what's going on with homes. I'll share a little bit, but what I'm very excited to do is share the information of what's going on in our lending institutions and our mortgage market. And I have a very special guest who's going to join me, one of my preferred lenders, Mr. Jordan Bedard. Jordan, how are you, my friend?
Hey, Paul, I'm doing well. We're staying safe as well and staying with the family, and we're making the best of what we've got right now. How are you doing?
I'm doing very well, my friend. I'm lucky that I've been doing social distancing type online presentations and meetings for quite some time now.
Right.
That's part of what my real estate company eXp is all about. We're still having our marketing meetings. We're having our broker meetings. We had one today. We have one tomorrow. Training. Everything's still going because we're a virtual online company. So I'm very excited about that.
Right.
But obviously, we're facing major challenges.
Yes.
We're facing challenges with people in regards to income and qualifying, and what's the state of our market going to be in the next couple of weeks. And you shared some great information with me. And by the way, folks, if you're watching this, you can ask questions in the public chat area. I'll keep my eyes out on the public chat section here if you have any burning mortgage questions for Jordan.
Great.
But Jordan, why don't you give everybody a little bit of background about you and your business and your company? Just a quick elevator speech to get people to get to know you.
Oh, fantastic. I've been a full-time mortgage loan officer now for going on 20 years. The team that I've assembled with Team Jordan at Guild Mortgage has nearly 60 years of experience. So we've really seen the ups and downs of all the markets. Nothing quite like we've seen right now, but I think you hit it on the point that we're very fortunate to be where we're at with the technology, being able to face what's going on globally. If this would have happened 20 or 30 years ago, I think it would be a very different canvas right now, and that our business is able to still, once everything was ordered, we have 95% of our entire company here in Las Vegas working from home, and really within 24 hours, that was up and running seamlessly. So we're very fortunate to be in that regards of things, and really just here to give positive reinforcement to the public. We're human beings, and we're here to help everyone to get through this, and I'm confident that we will. And we want to use our mortgage expertise any way that we can. We've been at kind of a hotline here the last couple of weeks. We're fielding probably 4 times the amount of calls, text messages, emails of just what's going on. And so we really want to project calmness and really be able to give the facts, not just headline bleepers to panic everybody, but really give the inside information of how we can help and what the mortgage interest rates are doing.
Right. Now, obviously, I sent out a notification that the Fed had lowered interest rates to nearly 0.5 point.
Right.
Now, a lot of people have misconceptions about the Fed in comparison to mortgage interest rates. Could you give the public a little bit of information about how the Fed is affecting mortgage rates? Is it a direct effect, or are there other factors involved? Can you share that information?
Right. So great question. So, just as layman's terms, as soon as in the mortgage world, we saw that announcement, probably within a half hour, text messages, emails came through, lock me in at a 0% interest rate. And we would love to, right?
Love to. I'll take it.
Yeah, that would be amazing. But we have to keep in mind that the news is there to grab headlines, to grab viewers. And when they announce that, hey, the Feds have moved to a 0% interest rate, it's only kind of half true. So yes, they did, but it's more the lending rate. So it's more when banks are lending to other banks internally, not dealing with the mortgage-backed securities, which is where all of the 30-year fixed mortgage interest rates are derived from. So it was more of an indirect relationship. Yes, that news, helped a tad bit, but did not instantly move interest rates from 4% down to 0%.
Right.
So a lot of where those going, the Feds have jumped in now. There's just been a lot of, it's a very fluid situation over the last couple of weeks, as you know. The most recent news right now is that the Federal Reserve has jumped in with the federal government saying that they are going to purchase mortgage-backed securities on a daily basis. And we're talking in the billions each and every day. They've got it systematically set up. So that directly is going to help positively affect the mortgage interest rates. That's where the 30-year fixed, your FHA, your Fannie Mae, your Freddie Mac, that is where interest rates are coming from. So if the government was doing that all by itself, rates would be, the lowest we've ever seen in our lifetime. We're having some negative factors that are going against that, where the Federal Reserve is trying to overcome, which is going to be a large part of investors. So investors are pulling out cash, and they're doing that to liquidate themselves just to be kind of ready for what's coming in the future. And so as they're liquidating those mortgage-backed securities, the Federal Reserve is trying to come back in and kind of make up where those investors are pulling out. So on top of that, the mortgage industry as a whole, we are inundated right now with applications, being it purchases, but an overwhelming refinance business. So with all of that being compounded as well, the mortgage industry as a whole has too much to handle in a sense right now. So they are artificially increasing the interest rate slightly to help slow the demand of the daily mortgage applications until everything normalizes. So we're expecting that once we get those refinances through the pipeline, that first wave that's already in, once those settle down, we're anticipating interest rates to get a little better again to kind of open up the floodgates per se. And so getting those next wave of buyers that didn't already get in a refinance or purchase now, getting them in the wings in the next, I would say, 2 to 4 weeks.
Got it. So when it comes to rates right now, though, most of the time they're under 4%. That's historical lows right there.
It's phenomenal. So when I say relatively speaking that, hey, things have moved up and down, running rates today, you're looking at an FHA 30-year fixed mortgage purchase right now around 3.125%.
Amazing.
APR 3.32, phenomenal. And you're looking at conventional around 3.375 to 3.5, around 3.75 APR. So
still amazing.
Phenomenal.
And are you seeing people, based upon the fact that, a lot of Las Vegans who are homeowners have equity in their home?
Yes.
Are you seeing cash out refinances taking place? Are people calling you about cash out? I want to cash out. What is it? Typically, you can cash out up to about 70%.
Actually, up to 80% loan to value.
80%.
Yes. So we are, but what is giving me comfort, being in the industry now 20 years, it's not irresponsible cash out.
Right.
Way back in the day, right, 2008, 2009, where home prices were going up, 10, 15% a month. People were rolling in, hey, I've got a Hummer, I've got an RV, I want to buy some, Sea-Doos. Let's roll that all in. It was very irresponsible. And
irresponsible. Everybody was irresponsible. The banks more so because they perpetuated it.
Yes.
And to be honest, my thought process here is, yes, we are going through a major economic crisis with 30% of the stock market being reduced.
Right.
But if you saw the 60 Minutes episode this past Sunday, I have to say, now that I'm an old fogey, I watch 60 Minutes every Sunday. They're talking about the fact that they are jumping into the market with liquidity. That did not happen back in 2008. They left homeowners hanging out to dry.
Right.
And now, I saw in an email recently from you, depending upon how long this goes, they'll probably implement it, forbearance on mortgages.
Absolutely. So they're really helping. And my end of the day message is just, we want to stay positive. With the people that are certain industries that are out of work right now, the good news is it's kind of as a whole. So you're in that group where the government is understanding that and going to help all of you. If you were just one individual that just lost your job, at this stage, you would be in a much, I think, worse position. Other than now, it's kind of your whole industry. So you're not just one person. I lost my job. I can't pay my bills. This is happening nationwide. And so whatever side of the political spectrum you are, I think the government is really recognizing and trying to step in, going, we're going to try to help as much as we can to see our nation through this. So it does bring me optimism, knowing that this is happening nationwide, and that they're working on it to try to help make everyone as whole as they can until everyone's back to work.
Let me ask you this. So, the majority of Las Vegans are service industry folks.
Yes.
You have obviously the service industry folks that own homes. Yes. They're out of work for maybe 2-3 weeks, maybe a month and a half. They want to pull out some equity out of the home that they've owned for 6 years, that they now have 30-40% more equity. Would you as a lender be able to do that based upon the fact that this is considered to be a short-term time period?
Right.
Or like their job is not necessarily essential.
Mm-hmm.
Whereas
right.
You have a medical professional or somebody that wants to take money out of their home, they're working 24 hours, 7 days a week right now.
Right.
How does that affect somebody's ability to tap into their equity?
So that's a great question, Paul. And we're getting a lot of those types of questions of, hey, great, we hear everything going on, but how does it specifically, pertain to me? And so what I can tell you, the way that Fannie Mae and Freddie Mac are providing guidance right now to the mortgage industry is that you do have to be working full time in order right now to qualify for your mortgage. So, tough to home here in Las Vegas, the service industry, there's a lot of people out right now that are, hey, we're getting paid for 2 weeks. After that, we can use our PTO hours. After that, it's kind of on a wait and see until things go back up. So for those group, right now, they're going to have to be on pause until the engines kind of start revving back up and they're getting called back into work. Until Fannie Mae or Freddie Mac changes those guidelines more as of today, those individuals unfortunately would not qualify for a mortgage of any type, rate and term or a cash out, until they're physically back at work.
Got it.
So we're working through that. And so guidance is always changing. It's always being reevaluated, but that's the latest news as of today, around 2:00 p.m.
What's a burning question that I haven't asked you yet? And I saw the graph here. I was going to share this real quick.
Yes.
Let me put it in the section here. Let's see if I can move this around.
Perfect.
We got the candlesticks right here.
Yes.
Oh shoot, I should have put it in at the very beginning. So
No
you're
problem.
let's go ahead and put it side by side. I can see the candlestick. Hopefully the folks can. Make sure when you're watching this, expand your screen on your computer so you can see the candlesticks. But I've seen this before and it always, makes my head spin. What are you trying to show me here?
I know. So I don't want to get too technical here, but this is a system that I've been paying for personally about 10 years. Not a lot of mortgage companies and individuals use it because it's quite pricey, but in circumstances like this, it pays for itself in minutes. So basically what this chart is showing, this is the mortgage-backed securities that I touched on. This is the trading on a day-by-day basis of where those mortgage-backed security prices are and how it directly affects pricing on a daily basis. So every line that you're seeing there is a day of trading. Green is good, which means rates and fees go down. Red is negative, means rates and fees go up. So
the green at the very end of that graph is shooting up, man. What does that mean?
So it's been amazing right now. So when I move over here to right now, these last 3 days of trading have been phenomenal in the sense of pricing, because that week before we saw interest rates go up about 1.5 points. So it was significant. So when we were way down here at trading, instead of rates being around that 3.3 to 3.5 today, they were 4.5 to 4.75 in that time frame. So this isn't public information that we can, but when working with Team Jordan, we give you access to this. This is what we track for you on a daily, up to the minute basis. So when you're in contract, we know the best time to lock you in, because the bigger that graph, red or green one way or another, your pricing can be worse in the afternoon. It can cost you thousands of dollars in the afternoon if we didn't lock you properly in the morning. So wow. We really use this. This is up to them. We get alerts in the way that my system is set up. we get an alert about 20 minutes before the actual rates change. So we really try to be proactive rather than reactive. Your money, we treat it like ours. So we do everything that we can once you're in contract to lock your money like we would. The best time to do so based on the information that we're seeing behind the scenes. Absolutely.
So you are essentially a day trader of the mortgage rates.
Yes, and I didn't know I was until when I was showing my wife, training her to do mortgages. She's like, "What is this? What is going on?" And so it really is, but it's really our lifeline because it really gives you the true measurement of what's going on with the mortgages, not just the headlines that you see. Because normally the headlines you see on the news, they're usually at least a week behind. Other than when they tell you the rates are 0%, they're spot on for that, but inaccurate as well.
Got it. Well, gosh, some of the programs that you and I have worked on, I understand have gone away. We were very lucky to get some of our home buyers into a program called Hope Brings You Home.
Yes.
But I understand that they have now earmarked that money for other things. Hope Brings You Home was a $20,000 down payment assistance program. We got a few buyers into it. Ladies and gentlemen, that is now kaput. They're going to probably take those funds and help with health care, help with buying supplies, help with unemployment. I believe that money was earmarked and it would have had to go back to the federal government if Nevada had not used it. I believe now what's happening is they've gotten the handcuffs taken off and they are now going to use that money somewhere else. However, the question is, do we still have money available for some of the other programs that were in place, like Hope Nevada Home is Possible? Is that still a program that's in effect?
Yes, it is. So it was unfortunate news to hear that the $20,000 program was gone. It's kind of one of those nothing in life is free, and here today, gone tomorrow. Unfortunately, that dropped off. We were fortunate enough to have a handful of buyers that we were able to close, and working alongside you, getting them in early. We had them preset. You brought us some buyers that were just ready for the program before it rolled out. So they were very fortunate to be able to get in there, and it was a phenomenal program. With that being said, it's gone, but there still is the standard Home is Possible down payment assistance program. They do have first-time home buyer programs with there as well. So really what we do with our team when we bring a buyer in to get them qualified, we kind of clear out all the noise for them. We kind of shutter away all the programs they don't qualify for, and we really narrow it down to what is specific to you and to your family. These are the programs you qualify for. Here are the pluses and minuses. And we really sit down and ultimately let them make the decision on what's best for them and their family. So there's down payment assistance. There's also even the standard FHA loan, which is only 3.5% down payment. And you're looking at today's rates in the low threes. So there's really a lot of options. So I would tell buyers that, if you're in one of those industries that is still working, we are still receiving applications on a daily basis for new home buyers wanting to explore the markets and take advantage of these phenomenal rates right now that are not going to last forever.
Right. Currently, I was taking a look at what's going on in the market right now as far as homes that are available. I'll share this stream with folks. Let's see here. I typically work on the west side of town. If you look at this graph right here, there are, oops, I should have not made it so big. Let me make it a little bit smaller.
A storm front coming in from the east.
Yes, with low pressure. So there's 2,835 homes of single-family homes available. I typically focus on selling homes on the west side of the 15. So right now, there's 2,835 single-family homes available. There's almost 5,000 homes total currently available when it comes to available homes. Jordan has an awesome video that introduces himself as far as, and you can click right here on the link. Just give me a call or go to mayteamlasvegas.com and register that you'd like to get approved with Jordan. And basically, this is the thing. It's timing is everything.
Yes.
And if you start to get your pre-qualification going now, with whatever hurdles you have. I'm sure, Jordan, you can say, look, once you get back, why don't you supply me with your 2 years of W-2 tax information, your bank statements. Once you're back up and running and at work, then we can get a verification, get you approved, and have you ready to go to buy a home at great interest rates. And I got to tell you, I'm sure that we're probably going to have more homes coming on the market that are going, so it's probably going to have a little bit of a surge of homes being placed on the market to sell. And that gives you as a home buyer an opportunity.
Right.
Where sometimes people think there's chaos, there is also opportunity.
Absolutely.
And Jordan, what is your website as far as going directly to it?
Let me pull that. If you give me 1 second, it's not as nearly as cleaned up as your website.
That's okay. So folks, go to mayteamlasvegas.com and register, contact us and say, I want to meet with Jordan. And then we'll go ahead and refer you to Jordan. Yeah. and on that note, I'll just plug the fact that, for the last 2 years, I have been conducting basically online virtual listing presentations and presentations as far as conducting a market analysis on your home. And we can do that for you right online without me coming over and being 6 feet away. I don't have to do that. I can be right next to you on a screen and show you basically what is going on with your neighborhood, what homes are selling for in your neighborhood, and how much we can ultimately sell your home for. We have our video presentation right here that allows you to, I can share with you online a net sheet showing you, I'm going to turn on the volume here. Let's see here.
No, you guys have been ahead of the time. I mean, you guys have been kind of, your infrastructure has already been set up for something like this, that if we can't do face-to-face, you guys already have set up the next best thing to be able to help and still give that level of service that your customers expect.
Right. Finally, it's something that everybody should look into. I'm trying to train agents on how to utilize social distancing, online meetings, just like we're having an online delivery of your message as far as what's going on in the mortgage market to our folks out there in Facebook land. And by all means, folks, if you have any questions, Jordan's phone number is scrolling down there on the screen. Make sure to give his office a call. Go to mayteamlasvegas.com to register to have me do a personalized market evaluation for your home. If you're looking to buy a home, we for with the tools that we have at our disposal. So between you, Jordan Bedard, and me, Paul May, we can take care of everything you need when it comes to helping you purchase your next home, sell your next home.
Love it.
Jordan, anything else you want to share before I let you go?
No, hey, I just want to say, everyone hang in there. We're all going through this together, and we've got to take a look at the opportunities of, hey, we get to, spend a little more time at home. My kids are in the 3rd grade and 1st grade, and I'm lucky we can still help with their homework. If this was
That's awesome.
Year, I don't know, but
mine's doing geometry and some sort of calculation that I have no idea what they're doing.
I can still handle their story problems right now, so I mean that's encouraging. But call loved ones you haven't spoken to in a while. Everyone's kind of in the same boat, so I think if we focus on the positives rather than the negatives here, we'll get through this just fine.
Sounds good, Jordan. Well, thanks everybody for joining us. If you do have any mortgage questions, give Jordan a call, and definitely give us a call or go to mayteamlasvegas.com to check out what we can do. Jordan, thanks so much for joining me, man.
Paul, thanks for having us, and hopefully we don't bring down your ratings.
It'll be fine. Thank you very much.
All right.
See you later.
Take care. Thank you.